All right, everybody, welcome back. So now that we're past the FOMC, back to doing the videos, I really had meant to put a warning in on the last video I had done, which was Monday, that there wouldn't very likely be videos on Tuesday and Wednesday because FOMC was coming. But that I will try to put warnings in when I know there's not going to be videos, so you're not looking for something that doesn't show up. All right, so here's the pre-market. We were um, what I call VWAP spinning, like, the old toy that you would take and spin on a desk or something. That's the spin that I'm referring to. It's a VWAP spin. We're just spinning around VWAP. Now we had set a Globex high right around 4,000, which is a key level, gamma level. And the expectation was that we might try to close the gap from the FOMC and the reaction of that. So let's just kind of back up into Wednesday's price action. And the gap is easier to see if we're on regular time-based charts. So here we had the 2 o'clock announcement had come out. The algos trade that. It gets pretty violent. Then at 2:30, we had Powell. Again, a lot of violence. And then we had that big sell-off. And what happens is that creates a liquidity vacuum. So we call it a gap, but since you see candles, most people don't really think of it as a gap. 40-40 is the level that we want to focus on, and 40-40 is a gamma level. So if we turn on spot gamma levels, 40-40 is the volatility trigger, and it's a large gamma location. It was also the gap close from that liquidity gap from yesterday. So as we were in the pre-market, let's take this back to my normal chart. As we were in the pre-market and we were watching that, we had every expectation that we would probably interact with our own Globex high. That would have been a trade opportunity. But for me, it's too early in the day. It was like 9:22 when we got up there, 9:32. Way too early in the morning session for me to want to play with it. But that was a good trade. It was a grind down, but you know, the markets really have been in a grind lately, and I guess it's kind of what we have to tolerate. The thing is, that was still a good play if it meets your time frame. For me, it just doesn't. So a good play on the day, just not mine. We'll go ahead and put a level on here. We'll shoot that across. So the morning wore on. We got stuck in this sideways thing, and notice how price was just stuck here. Now I call that a draw, like in they're drawing you in. Really tight range, big wicks on each side. It's just drawing in more and more and more traders. We could look at this as a rally base, but that's a really big base. And if we're going to talk rally base drops and rally base rally, we would want something that looks a bit more like this: drop, base, rally, drop, base, rally, something like that. We wouldn't want it to be something like rally and then just base, and just keep on going. That's not good. So the longer we stay tied up like this, the bigger our expectations are for a move. One thing that I like to do when we get a tight range is I'll measure off both sides of that range. So that's the upside measure. And we just do the same thing in the other direction. That's the downside measure. And now I've got some very near-term targets to focus on. One of the reasons that I like to do it in both directions is if this is a draw, then we often get a raid into liquidity and then a dump down in the other direction. And if it is going to be a raid, it shouldn't really get past that 150. There's times where I've seen it go to 200 and still be a raid, but it's a little less common, right? And for the raid, it should get right up in there and come right back down again. If it keeps going, it's not a raid, it's just a run. So laying out these levels, one of them that's on there is 4031. That's a cog line. And this didn't extend far enough, but 4040 is still that level of concern. So we got the cogs 4011, 4031, and 4040 on the upside. We just had to get out of this box. So watching the clock, 10 a.m. finally came, and we started to really expand a little bit. 10:30, when Europe closed, we were in yet again another box. And we were just all morning long doing this, right? Just a little bit of expansion, we're in the box, and a little bit of expansion, and we're in the box. But at 10:30, everything changed, right? Notice how 10:30, we come up off of that low, come right up to the top, and break through and break out. And the game is on to the upside, all the way up to 440. Now, to me, that was the play of the day. I'm going to go ahead and turn on a bunch of levels now, but I'll show them to you one at a time first. So we got voodoo lines, 440. We can see it sitting right up there. It's not exactly, it's like 437, but it's all right, close enough. We've got spot gamma levels. It's a volatility trigger, and it's a large gamma level, 440. Then we've got history. We got a VPOC up there, 4033. And, you know, we were kind of resting on that a little bit, but we had overshot it. And when we put all of them together, we got something that looks a little bit like this. And maybe it's a bit much, you know, when you're looking at them all at once. But that was the trade of the day. So I gave a call out that I really think that we were going to stall out. A lot of my other signals and warnings were showing that this was having difficulty, and it looked like it just wasn't going to make it. Now, my call out was 11:43 in the morning after I'd done everything that I needed to do and kind of research everything. 11:43 in the morning was right about there. So just before that third triple top. That's where I got my last bit of information that I needed. And it's where I gave the call out for the short. Now, the target of the short was back to the open of the day, the RTH open. So we're talking about like 39.96, right? That was the goal in that short. And when we got there, it really looked like it was going to be the end of it, right? We started to get a trend line breakover. It looked like perhaps we were going to test VWAP, and then it flipped right back over with a 2-bar reversal and kept right on going to my next target, which was 39.50. Right? So the trade of the day was this short. We went 90 points. Now I caught 15 on the first call out, and then I caught a couple of smaller ones just, you know, here and there. Actually, to me, the smaller ones, they pay better because I got a higher conviction in the trade. With the bigger move plays, well, we never know how far it's going to go before it pulls back to challenge us. And, you know, depending on what you're trading, you might not really want to see much pullback, right? So in the longer plays, I tend to use less contracts. I only had 2 contracts in that 15-point move. But in a smaller play, I tend to size up more because I'm only looking, you know, 5 to 7 points, and then I close it. So I tend to use more position size. So that was the short of the day. We had Wednesday's low, Wednesday's high, or that was actually Wednesday's gamma Globex low that we broke through. And one last hurrah, I call this like the 1, 2, 3 fail. Each one was failing to get above the previous one, and the market really doesn't tolerate that well. So if we try to run up and we fail, that's 1, 2, 3, and down we go. It's not always so easy to time a 1, 2, 3 fail, but a lot of people will wait it out and end up getting in somewhere around right there. And that was a nice 2-bar reversal if you had not yet gotten into it to join the play and get in. I almost got stopped out here, which is kind of probably par for the course for a lot of you. If you're already in and you start moving your contracts down with price, and then it runs back up, takes you out, and runs away without you. But I had 2 contracts on, so you know I was able to kind of stay away from price a little bit. It missed me, thankfully, and down we went. So perhaps the best trade of the day. Now, when we got down to 39.50, before we got there, we actually had to deal with the low of the RTH open. Now, I called the open as the target for the short to begin with. And when we got there, it really seemed like perhaps the day was going to be done just right there. That was just going to be the end of it. I'm going to go ahead and make that stand out for a minute, shoot it across the chart so we can hone in on what price did when it got down to that open. So it was a nice play to the upside, and it looked like we were actually going to try to reciprocate and run back up again. More than likely, what my call out was that we would get through the VWAP, which is that dotted line kind of swooping across the chart there. I kind of thought we would get above that, and then we would just crisscross back and forth doing like a VWAP spinner for the rest of the day, if we managed to get there. But we didn't even get there. It just rolled on over and down we went. It took one more challenge across the low that was set when we broke through the RTH open. The warning that I gave here was be careful. This is looking like a micro double top, or excuse me, a micro double bottom. And if I zoom it in, that's what it looked like. And, at the time, it really did look like a bear trap and that we were perhaps going to try to go back up again, especially on that little rebound right there. But then everything just came flooding right back in again. It couldn't hang, and down we went. I think the second trade of the day that was a high probability play was that bounce off the RTH open. And the third one was the bounce on 39.50. Now you could take either one of them. There's our classic double bottom bounce, the one that is a bear trap that likes to suck everybody in and trick them and then run them over to the upside. Really great play for a long trade. That one was past my time frame. I don't really like to trade past 3 o'clock, so I wasn't even looking at that point anymore. I kind of thought we had done pretty good. It called the high, called the reversal, called the target to the open, called the target to the bottom, and I mean, I'm about done at that point, right? I really didn't need anything else. But both of those bounces, 39.50, either one, and I like this one better because there's more conviction in it for me, even though I don't like this one as much because of the time frame. But having the first one at 39.50, a lot of people don't like that one because how do we know it's the low yet, right? It's hard to trust the first one. But the second one, you already have your low at this point, and you're just coming back to retest it, right? You're just coming back for that double bottom bear trap bounce. So if it wasn't for the time of day, this would have been the best trade of the day. And it doesn't even matter that it didn't travel 90 points like the other one. Doesn't even matter. The conviction in this bounce, way higher than anything else we had today. That was the best one. Too bad it happened after 3 o'clock, though, really. I mean, other than that, it was great. The first one, 39.50 bounce right there. I have trust in that kind of play because I've played it enough. It's kind of fatalistic, right? If it doesn't work, it's going to roll over. I'll close it and look for another opportunity. There's nothing I could do other than just take it, right? And so for me, I just take it. Just let it all work out and see how it goes. But this second one, at least with that one, you do have the previous bounce, right? So you have a little more confidence in the move. So those were the plays of the day. I really think that is much better now that we're past the FOMC and all of that wildness. So we're back and we should be good to go until we get near, say, maybe the PPI or CPI numbers. And then we'll have to worry about days that we don't trade again, right? At least for me. So if you have a trade today that was not one of these, you think, was at least as good, or was your best trade of the day, hey, put it in the chat. Let me know. I want to check it out. Otherwise, y'all have a great day, and I'll see you again tomorrow.